Hey, what's going on, guys? This is Terrence Ray back at you with another stock market update. Today, we're going to talk about the week ahead, and I'm going to go over some top equities that were traded at the close of the bell yesterday, or by the end of the close yesterday. And we're just going to go over some charts, see if we can find something to trade coming up next week. All right, the market it did sell off a little bit. Let's see, towards the end of the day we look at the SPX, you can see we got a little wick right here, right? So that, it was up. So it closed off of the highs yesterday. I think it sold off maybe about 20, 30 bucks going into the close. Now, the expected move for next week is only, if we come over here to the options chain, is 53 bucks, $53.04. Now, what jumps out at me is last week it was $89. So that's instantly letting us know that the market is pricing in next week a smaller move. So last week, ball was jumping. We had a large move priced in, and we pretty much had went outside of the move, right? So the market got it wrong. If you would have sold, the expected move, you would have, unless you sold it to the upside, like if you would have sold a put spread or something like that, then you would have made money. But if you would have sold like both ends, both sides, the top, the bottom, or if you would have sold like just the put spread, I mean the call spread, you would have lost money because the market didn't price it properly. So with that being said, we could get an outsized move outside, the expected move, but with the expected move only being 53 bucks, don't expect a real big move. You can see I drew it right here on the chart. We got a gap right here below price action from Friday, and then we got another gap down here. Now I do think at some point the market will come down here and fill these gaps, but we also have a gap right here that the market is coming into, which will act as resistance, or at least it should anyway. So I'm gonna go ahead and draw that, put that on the screen so we can see that. And if you look right here, so expect, and you can see that's exactly where the market turned back. So we may see a little chop next week as the market opens up. So we just have to be on the lookout for that. Um, Something else I wanted to talk about. We're gonna go to over here. Now I am on the TastyTrade platform. So if you look up here, if you come over here and click on Tasty, and then you come down and drill down to hourly top equities. We're going to look at this list. This is going to show, they're showing you that as of that last hour, about 3 o'clock, what was top, as far as their platform, what traders were trading through their platform. And so number one was Apple. And so if we click on Apple, and this is option wise, I believe, because obviously it has to be options, because if we look over here at volume, Apple sold 79 million shares were traded. 120 million shares of Tesla was traded. So it's options and not actual stock. And if we look right here, let's look at Apple. Let me remove these drawings, 'cause we don't need that. That's some old stuff. So if we looking at Apple, first of all, number one, what jumps out at me is I got some divergence down here on my awesome oscillator. So this is exactly how I break down, if I was doing this and I wasn't doing a video, this is the same thing I would do. Come down, I look at my technicals. I probably would draw a trend line. Let's go ahead and do it. I would draw a trend line from here to here. So you can see we got three touches. We got one touch, two touch, three touch. So that's a good trend line for me. It's a real good trend line. Now, let's go down here at the oscillator and let's draw one down here. Let's go. Now, what jumps out at me when looking at this is on the oscillator, we got the oscillator going up, losing momentum, even from this low to this low, and even from that low to that low. But we saw price action trading down, and we almost like I also see if we do something like let's draw it out here, like so. See that? Almost like we got some resistance right there. And you see we got a pullback and it looked like the market is going higher. So just based off of this right here, I could see Apple going higher. So you guys see me. This is how I find trades. I like to come to this part, the tasty hourly top equities, and you're gonna see this is what everybody else is trading. I'm in some groups online, and one of the things that I see is that it seems like everyone is trying to find the one thing that nobody else saw. Like, what's that one stocks that no one else saw, and they drop a stock name out there. It'd be something you never heard of. Um, Johnny's grass cutting service or something. Something crazy, and then everybody go try to look that up, and they might be trading at $2.02. And you see somebody, oh, it's going to the moon. Y- that stuff. It's a reason why no one's heard of it and no one's trading it. Why trade that? Why get caught? Why get caught up in that? And you'll say the reason why I'm saying, yeah, it could moon, or go sky high. Any of these stocks could do that, and it's cheap. But it's a reason why it's cheap. So the chances, or shall I say, the probability of it doing that, are slim. So why not trade Apple? Worst case scenario, let's say you buy the stock right here, wherever, and you're wrong about it. If you hold it long enough, it's Apple. I mean, it's Apple at the end of the day. It's not like you're buying a garbage stock. So even if you're wrong and it goes down some, maybe over time though, it'll go up anyway, right? Yeah, that's what's been going on, since its inception. So, and I think it does pay like a little cheap. Apple even pay a little 24-cent dividend, which ain't a whole lot, but you are getting paid something for holding it. And I do think that it's gonna break up out of this. See this trend line here? I think we'll get something out of here. It'll probably explode out of here. Let's look and see. Now I might trade Apple. I had no intentions on before looking at this video of trading Apple. I'm being honest. Um, I do like I do like Apple coming up out of here. That give me a price target to close this gap. See how this gap right here lines up with my Fibonacci level? That's some confluence there. That's what I call, or what is called, confluence. So we got our little pattern right here. Looks like I don't know what you want to call it, a descending triangle or a pennant. You got that, and then we got a high, low, higher, high, right? And then we got a low, and the day ended green, moving up. So if we can get it to break out of this trend line right here, next level, take profit level is right up here at these highs at 182. Then we got another level up here at what, 187. Oh, and then we got another level up here. I'd probably be right when it closes this gap right here. I would take profit right around 190. When the market opens up on Monday, I will be looking at a trade in Apple. I like this. IV rank is low. So which what means is you're not gonna get a lot of money selling options in Apple. So more than likely might want to buy. I don't know, you could buy a call spread. Me, I would probably shoot for the 182, and they don't have single strikes. That's the thing. It's gonna be hard because you got $5 wide strikes on here. This may be honest with you, might be a candidate to just buy shares, maybe a covered call, because I don't see you getting a lot for selling a put spread right here at the money. You collect 147, but it's more of a directional trade. So I don't know, maybe a call spread. but you're not gonna get that much movement to make a lot of money. So you may have to do Apple is liquid enough where you don't have to be in the, let's see, not 34 days, 27 days. I'm trying to get to where we could get some more strikes. So they're going to open up more strikes right here in this 20-day. When the market opens Monday, you'll see some trading going on around here. So it's kind of hard to trade this. You got a low IV rank. You're not getting more that much bang for the buck. So the only thing I would say right here, you either sell this put spread right here, right here, sell this 175 by the 170, or buy the shares outright. Maybe sell a cover call, buy 100 shares, sell the 185 cover call. You can do something like that, or you could sell a naked put, sell the 170. That's not bad. That's not bad at all. If you sold the 175, you'd be real close to the money. So I wouldn't do that. If I did anything, it would be sell the naked put right here at the 170 strike, or sell the put spread right here, sell the 175 by the 170. That's what I would do in Apple if I was going to trade Apple. So with that, guys, if you if you got something out of this video, I want to keep this video short and sweet and concise. So we just gonna cover Apple in this one. Then I will come back. Make sure you subscribe because I'm gonna come back and then I'm gonna break down. I'll probably go through about five or 10 more stocks right here. And we'll just keep these videos short and sweet. That way you can uh, consume the information and then we can get something else put out instead of making these videos long. I had no intention that I was gonna really like this chart that I seen at Apple. So then this in and of itself is a nice setup. All right, guys, I'm gonna be out. Look for me later with some more videos. Peace.